What's up, everyone? It's Scotty with MoneyVest. So the first quarter of 2024 is finally in the books because tomorrow the markets are closed in observance of Good Friday. So in this video, I'm going to give you an entire roundup of how the first quarter transpired, what stocks, what commodities, what cryptos, what really happened in the first 90 days of 2024, as it has obviously been one of the strongest starts to the year, with the S&P 500 and the NASDAQ, both indices, including the Dow Jones, up on the year so far. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. That's all I'm asking in return. And of course, subscribe to the channel if you haven't already. We're almost at 78,000 subscribers, so make sure that you do hit that subscribe button. And also, of course, join our Discord and our Patreon with the link down below. There is going to be a 16% annual discount that's available until the end of this month, so 3 to 4 more days left if you're interested in joining us. So this right here was the state of the market. So NASDAQ here, 16,379, and of course basically flat on the day, down about 12 basis points, 11 basis points increase in the S&P at 52.55, and of course just a little bit over 39,800 on the Dow, up about 12 basis points here. So basically we were very, very flat here on the day for the markets. So this is basically the entire heat map. Apple here slightly down 1%, Meta here down a little bit over 1.6%, Tesla selling off over 2.2%. We did have a lot of financial stocks pushing higher. Energy was green. We had consumer staples and utilities and materials, a little bit of healthcare, a little bit of software application, including semiconductors and technology, and of course some of the asset management, capital markets, and banks also pushing higher. So most sectors were green, as you can see on this chart. Almost every sector is green with the exception of tech and comm services. Two sectors basically selling off here on the day. In the last 1 week, again, more sectors are green except for technology, which was selling off. And in the last 1 month, every sector in the S&P 500, all 11 sectors are basically green over the last 1 month here for the markets. This right here is going to be the daily performance of commodities. We got corn, palladium, wheat, volatility, crude oil, natural gas, gold prices, everything pushing higher, with rough rice, coffee prices, and orange juice selling off. Bitcoin just a little bit over 70,000 and Ether just over 3,100 as well. So if you come over to this chart, this is the best performing sectors in the S&P 500. So we're talking about SPX over here. So S, P, and X. I'm just going to type in my best to do my best here. That's going to be a P, and that is your X. So S&P 500, and the best performing stock comes at a no surprise at Super Microcomputer. That's your SMCI. That's the stock that we analyzed back in February of last year. It's been just on an insane rally, up about 856% in the last 1 year alone. The next one also doesn't come as a huge surprise. Nvidia up over 82% on a year-to-date basis. And we got Constellation Energy 58%. Deckers Outdoors, this is ticker symbol DEC, also pushing up over 40%, up about 108% in the last 1 year. Micron surprisingly up 38% year to date, 85% in the last 1 year. Then we got GE, we got Meta Platforms, of course, up over 37% year to date. Again, these are the last 90 days worth of returns for these companies. Eli Lilly pushing up a little bit over 33% and 131% over the last 1 year as well. So these are some of the best performing stocks that have done incredibly well. They've gone up in value significantly. Now let's talk about the companies that have gone down, right? So worst performing stocks in the S&P 500, starting with our very own beloved friend Tesla over here, down almost 30% year to date. In the last 1 year, down a little bit over 9%. We got Boeing also selling off, down about 25% year to date. We got Lululemon. I did actually a video on this company before. Make sure that you do check them out, down about 23% year to date. But this is the only stock that has actually done really well in the last 1 year, along with Adobe, which is also having a pretty bad start to the year, down about 15.5% after the earnings came out. But last 1 year, still very, very positive. I actually got a video coming out on Adobe as well. Walgreens reported earnings today after the bell, beat on EPS looks like, and I think a decent beat on revenue as well, down about almost 17% year to date. But of course, the last 1 to 3 year returns have been pretty horrendous, down about 36% to 58, 59% respectively. Warner Bros. Discovery also down 23% on a year-to-date basis. Biogen also selling off about 16%, all the way down 21 to 22%. And then also Etsy is down a little bit over 15% year-to-date, down about 36 and 65% respectively on a 1 year, 3 year basis. So these are some of the worst performing stocks in the S&P 500. Now, if you come over to commodities, what commodities are actually doing well? Cocoa prices. Surprisingly, cocoa prices are up 132% year to date. Gasoline is up 29% year to date. Lean hogs prices up 27%. Crude oil is up a little bit over 15, almost 16% as well. And orange juice, once again, for the win on a year-to-date basis, up a little bit over 12.5%. Orange juice, we love orange juice on the channel here, pushing up really nicely, having another fantastic start to the year. And again, these are year-to-date. The reason I'm going over year-to-date is because first quarter 2024 is finally in the books. This right here is going to be the worst performing commodities, and natural gas is up. That's actually good because that's going to potentially help inflation at some point as natural gas prices are down year to date. Soybeans are also down 12.5%. We got wheat prices and platinum prices down 10.5% and 8.5% respectively. Along with other commodities, we got corn prices, rough rice, palladium, oats, and soybeans, everything pushing down anywhere between 5 to as much as 7%. Now, in terms of sectors within the S&P 500, technology continues to lead the way, up about 12.5% on a year-to-date basis, followed by comm services. Financials are actually doing really well. They tend to be a little bit more of an underrated sector. So I do believe that there is some potential, there's some attention that needs to go towards financials that are up 10.3% on a year-to-date basis, and they continue to perform really well. Industrials, energy, healthcare, and consumer defensives, everything is up anywhere between 8 to 9% on a year-to-date basis. Real estate is the only sector that is struggling at the moment. Now, if you come over to some of the bigger names and bigger stocks here, NVIDIA, as I already mentioned, on a year-to-date basis is up the most, 87%, followed by TSMC, up about 30%. And then if you take a look at some of the big tech, large cap companies, we're talking market caps of well over $400-500 billion. We're looking at Walmart and Amazon. Amazon's also having pretty fantastic year, up almost 20%, and Walmart's up 14.7%, with Microsoft 14.5%, Google up 13.8%, Visa up 9% so far in the last 90 days. And really the two big companies, we got Apple and Tesla, really struggling right now. They're both down. Apple's down 6.5%, and Tesla obviously down a little bit over 20% as well. Now, when it comes to small caps, IWM is also doing really well. That was also one of our ideas going into 2024. Fundstrat also mentioned that our top idea for 2024 is small caps. This is from Tom Lee, where we see at least a 50% upside. Russell 2000 companies are set to grow faster than the S&P 500. Valuations are far more attractive. When CEO confidence recovers, we also see the low valuations as setting stage for synergistic M&A mergers and acquisitions as well. And this right here is essentially what they are highlighting, that all of the small cap companies, small cap sales, faster growing versus S&P 500. And of course, valuation wise, they're also trading at a much cheaper and much more attractive valuation compared to the S&P 500. So it is lower compared to the S&P 500 as well. Now, this right here is actually quite crazy. Market expectations have been flipping back and forth. And what we have now witnessed is that the expectations are for a little bit of a cut in June, and then for us to stay there for at least a month, and then another cut in about September. So this right here is going to be a cut down to 4.75 to 5%. And then an increase in rates going into November, so on my birthday, basically, another rate hike of 25 basis points, and then a jumbo cut, basically a 50 basis point cut over here, and then a cut over here as well. So really, I mean, the markets are just going back and forth with a cut, raise, double cut, and then another cut all the way through April of 2025. So I, at this point, have kind of given up. I'm like, okay, markets, do whatever you want, expect whatever you want. I'm not getting involved because this is just too crazy. I mean, this is just a cut, hike, jumbo cut, and then another cut. So it's just like going back and forth in those expectations now. Now, in terms of inflation, this is where we sit as of March 31st, 2024 to close out the quarter. 3.2%. We have, of course, been trending lower for inflation. That is good news, but we are still somewhat higher than the Fed's target of about 2%. And right now we're sitting at just over 3.2% at the moment. If you take a look at core inflation, so X food and energy, this is where we need to be at around 2%. We're still trading at well over 3.8, so that is really the discrepancy between core inflation, of course, where it needs to be and where it exactly is at the moment. Of course, it's been trending lower, which is good news, but we still have a little bit of ways to go for core inflation. Unemployment, on the other hand, is ticking higher a little bit, just under 4% at the moment. So 3.9 is where we are. Of course, the pandemic peak was well over 14, almost 15%. Since then, we have made a lot of progress to come down, and it's really been stable at a 50-year low for the jobs market, right? So very, very strong labor market with unemployment rate sitting just under 4%. It's been ticking higher a little bit more recently, but for the most part, it's been very, very strong with a very nice labor market over in the US. Now, when it comes to the S&P, so we did have a Fed meeting in March, and summary of economic projections did suggest that interest rates are indeed going to stay put where they are. 4.6%, that is the expectation from the Federal Reserve. They did cut their guidance on the expectations for 2025, meaning that they were expecting 3.6% as interest rates for next year, but now they're expecting only 3.9%, meaning fewer rate cuts expected in 2025. Although inflation, core inflation, they are expecting it to be a little bit higher at 2.6% for 2024 as well. I do want to remind everyone that if you want to get access to all the amazing members-only benefits, including all the trade alerts, trade ideas, options alerts, we do have a few more spots open with that 16% annual discount. Link's going to be down below. We'd love to have you on board. This is at the tip of the iceberg. We're planning to share a lot of amazing features and website features, including a lot of analysis on the macro side and on the fundamental side. So link's going to be down below. You get early access to the beta launch when we do have that initial launch at the end of hopefully next month. But with the delays with technology, I just want to do it right. I don't want to rush into it. But when we do launch, it is going to be one of the best things you've seen in financial services, fundamental analysis, and macro analysis as well. So again, link's going to be down below. We'll love to have you on board. So first things first, let's just quickly go over volatility. So again, just moderating a little bit, 1.8% in the green, just over 13 levels at the moment. And again, 15 is going to, we're going to keep a close eye at 15 here. And of course, inside this red rectangle, very, very important levels to keep in mind. Crude oil, unfortunately, seeing a breakout. We're up over 1.7%, back over $83 a barrel. Starting to see a little bit of a breakout beyond this level here. And next target and resistance is going to stay put at $93, $94 for crude oil, with a very important support inside this green rectangle between $71 and $73 a barrel for crude as well. Now, going over to the markets, so S&P 500. So SPX here continues to drift slowly and steadily higher. I mean, almost trading at new all-time highs, pretty much making new all-time highs here on the day today. And support level, as we have already discussed, at 51.88, kind of aligned with that 21 EMA, and of course, that previous resistance acting as a new support over here, along with that higher low for S&P as well. And if we do see a breakdown below this, next support is going to be down to 5,050, all the way down to 4,900 for S&P as well. So those right there are going to be some of the levels to watch for S&P. NASDAQ here also continues to move higher, hitting a new, of course, almost a new all-time high. Support level is going to stay put at 16,300 on the NASDAQ, and of course all the way down to as low as this 15,150 to 15,400 on the NASDAQ, at which point I would be a lot more interested and excited dollar cost average into the markets once again. So those right there are going to be some of the levels to keep in mind. Starting with Apple here. Now, Apple did see some buyers stepping in, especially if you take a look at the L3 banker oscillator. We did have a yellow candle suggesting for whales starting to kind of step in a little bit into Apple, consolidating sideways at a support. So yes, the trade idea is still valid on Apple, considering that it continues to validate that support. I mean, this could really just be a timing of accumulation, where a lot of investors kind of see this as an opportunity. A lot of institutional investors and even traders in general see this as an opportunity to accumulate a lot of Apple, because I do believe the DOJ suit is a little bit of FUD that is causing a lot of negative sentiment around Apple as a company long term, and down about 14% and trading at a very strong support, which it has validated in the past and has ripped over 20% from those levels. So keep a close eye. I mean, RSI looks good, MACD looks good. There is some institutional involvement here at these prices. So keep a close eye at around support here, 169 and 170, with a target that's staying put at roughly around 199 and all-time highs at 200 plus. But of course, if for whatever reason Apple ends up, let's say, breaking down below this level, then the next support, much stronger support, is going to be sitting roughly at 152, 153. And that, of course, is going to be a much better risk-reward trade-off for Apple. Talking about Amazon, and Amazon here also starting to see a little bit of a breakout beyond this 170 to 179 level. The next target and resistance is going to stay put all the way up to 188 for Amazon, and support level is going to stay put at 179 down to inside this circle and the higher low and the 21 EMA and the horizontal support. So you got a lot of confluence at those prices for Amazon, sitting roughly at around 158, 159 for the company. Talking about Tesla, and Tesla we have already discussed at quite detail here, down about 2.25%, selling off. There is that bullish divergence that continues. Institutional involvement is present. We are seeing some green candles, which is good, but this right here is still the downtrending channel of lower highs and lower lows. So it continues to trade in this downtrending channel, not super strong in terms of that technical momentum and resistance, and very, very important area of supply, sitting at 200s for Tesla. Nvidia, on the other hand, showing some signs of weakness, so we are starting to see a little bit of a pullback, 2 back-to-back red days, and then just consolidating sideways today. Support level is going to stay put at $845 to $850 for Nvidia. And of course, a resistance that's going to stay put all the way up to as much as 971 for the company as well. So very, very important level at 971 here. Support level at close to 844, 845 for Nvidia. Talking about advanced micro devices, and AMD here also starting to pull back, consolidating sideways for the most part. Support level is going to stay put at 164 for advanced micro devices, all the way down to this 21 EMA and 151, some levels that we have already discussed in the past for advanced micro devices. Talking a little bit about PayPal, and PayPal here on the day pushing up 63 basis points. We did discuss that, look, there is a lot of institutional involvement. There's some bankers stepping in with some big orders. Volume is pretty strong. RSI, MACD, there's a lot of momentum kicking in for PayPal. But the most important thing is that it needs to break out above this resistance of $68. If it can break out above $68, that's going to be making a new higher high for PayPal, and that's going to lead to more potential upside for the company. And the next target and resistance is going to be at $76, $77 for the company, and will eventually be breaking out of this big and this huge downtrending channel of lower highs and lower lows after such a long time. But the first things first, it needs to find a way to break out above this resistance of $68 so we can actually make a new higher high and start making some higher lows as well. In fact, I would argue that we've already made a new higher low. So this right here could be seen as a higher low. And in fact, actually, you know what? I could even argue that we are seeing a little bit of a head and shoulders, inverse head and shoulders, with this being the neckline, left shoulder, in fact, this right here being a head, and this right here a little bit of a right shoulder. And there is possibility for us to see a breakout beyond this level for PayPal. So there's a lot of technicals that are suggesting for more potential upside for PayPal from these levels. Of course, time will tell if that actually does happen or not. Visa, on the other hand, starting to pull back, and support level is going to stay put down to 273, down to a much stronger area of support here in the 250s, also aligned with that 200 simple moving average as well. Meta, on the other hand, starting to roll over, which again is very common, very normal, considering that we were witnessing a little bit of that negative divergence. L3 banker oscillator suggesting for some exits and some quitting on the institutional funds, and RSI MACD also rolling over, with the support level staying inside this green rectangle, sitting roughly in the 450s and 470s for Meta, down to as low as that 21 EMA in the 380s, a little bit of a gap to also fill for Meta eventually. Netflix also rolling over, RSI coming down, MACD's coming down, and we've got that 21 EMA along with that gap to fill for Netflix, and of course a very important support in the 530s for this company. So this right here, also very, very important levels to keep in mind. Google, on the other hand, is also starting to consolidate sideways, so not really seeing a lot of momentum to the upside, but at the same time not really selling off either. Again, it is starting to become more on the overbought, overextended side, and it's also approaching that level of resistance. There's been some, in fact, a lot of institutional involvement here, but if we do start to see some exits and some quits, of course, the price is going to start rolling over. So just to be a little bit more cautious here, because the risk reward is not that favorable from an upside standpoint, and support level is going to stay put in the 130s once again. And finally, we come over to Microsoft, and Microsoft here is really starting to roll over, and it has been pulling back from its highs of 431. Next support, most important support, is going to stay put inside this green rectangle, kind of aligned with that 21 EMA, and of course this higher low for Microsoft as well. And then finally, we come over to Enphase. ENPH did see a pretty strong rally yesterday. I did a video on Enphase, and of course a lot of other solar stocks earlier today, so make sure that you do check that out. We got that 200 SMA right now. It's getting rejected at that 200 SMA. We haven't really traded above that simple moving average since January of 2023, so that would actually be a pretty big deal if you are able to break out above this 200 SMA, and of course retrace back up to 138. That's going to be a double top resistance for end phase at the moment. And finally, we come over to Costco, and Costco here on the day also consolidating sideways, not really moving anywhere at the moment. Its support level is going to stay put down to 713, down to as low as $678 per share. So hope you all enjoyed this video and a complete update on the markets. We had a lot to unpack in today's market update, but again, make sure that you drop a like and subscribe to the channel. I would really appreciate that. I'm recording this video at 2:30 in the morning, so all I'm asking in return is that you drop a like and subscribe to the channel, and do join our Discord and Patreon with that 16% annual discount available until the end of this month. And first quarter 2024 is in the books. We are done, folks, with the market absolutely trading, ripping higher, and at all-time highs. So always, happy investing, and I'll see you all in the next video.